Hey guys, what's up? PipSnipers here, back for another update. Let's take a look here at BTC. Now, BTC is seeing a little bit of a push up here on Sunday. Don't forget that Sunday, it's very illiquid, so you're going to get many manipulative moves to the upside and to the downside, a lot of fake outs along the way on weekends. Now, on Sunday, we're seeing this push up. However, we're doing so on negative divergence. So although we're making a higher high over here in this small range, we're making a lower high in the grand scheme of things relative to October 27th. So from October 27th on the RSI, we're making higher highs here. So that's your hidden bearish divergence. And then you're also going up from here. So from November 4th, you're going up and the waves are overlapping, but you're doing so with declining volume. So there's no volume, you see? We're making lower highs on the volume. So you got hidden bearish divergence from October 27th, negative divergence on the volume from November 4th, and we could come up to the 21-day moving average. Okay, that's just in between the 50 and 61.8% fib, right around here. Right, so this is the 50%, this is the 618, the 21-day is right here. Okay, we could also come up to the 50-day, which is this purple line near the 786, but it's very important to note the reaction once we get to around this region to see if we fade back down or not. Okay, so far this does look like an illiquid move to the upside. Especially we have to acknowledge the context in which the move is occurring, and that's on a weekend, but also more importantly in the midst of a downtrend. Okay, so you see how we're still trending down, we're still below the moving averages. This still does look like Wyckoff distribution. Taking a closer look here, we have a 3-wave move down in your A, 3-wave move up in your B, and now we're coming down in a 5-wave move. However, it doesn't look like our 3rd wave is done just yet. Now, that 3rd wave is likely to come down to around this weekly fair value gap, and I did check the Bitcoin liquidation heat map, and there's a lot of liquidity resting around this area, 93 to 86. So we not only have that major draw on liquidity below, but we also have these equal lows. This is our equal low sell side liquidity, and if you take a closer look on the daily, we have what's called a tweezer bottom. Now, with a tweezer bottom in crypto, what you'll notice most of the time is you see a little bit of a push up, but it's unlikely to be sustainable, and because you have a lot of buy stops resting here. So initially you'll see the move up, but you'll come back to take out those lows. So you have equal lows in that regard, right? Considering this is a tweezer bottom. But you also have equal lows right over here. You guys see? Boom and boom. So even though we're having this push up, it's very important to consider, how we react to these retracements, right? Because we could come down lower, take out this equal low sell side liquidity towards this weekly fair value gap. Okay, let's go back here. Okay, we also have triple negative divergence. So let's remove this volume tool over here and take a look all the way. Excuse me. Let's take a look all the way back to the beginning of 2017. You see you have triple negative here. Take a look at the 2-week RSI. Okay, triple negative, right? And that triple negative triggered in March to April of 2024. However, that wasn't the top. So what you needed to look for from there is a triple negative on the internal. So this is your 1, 2, and third. That's your third one right there. And this third one is occurring at the end of a 4-year cycle, right? Now, it's a common misconception that Bitcoin goes on its own, right? Without the stock market. And they're two separate markets. They are two separate markets. However, a lot of the liquidity it's all relative. So stocks also have 4-year cycles as well, right? And considering we have bearish divergence here on the Russell, let's take a look here. We not only have bearish divergence on the Russell, but I wanted to point out, one sec. Divergence on the Russell, but we also have this Wyckoff distribution range, and it's the exact same thing as total. The only difference is total 3ES, sorry. The only difference is that we didn't get the breakdown yet. Take a look. You guys see? And then put the RSI on the daily. And look at what you have here. You have an equal high, even though the price is going higher. So that's what's called your Class C bearish divergence. It's not the strongest of divergences, but it's still bearish. It's still there, right? And then what you have is consecutive highs here. So this is your internal. And then you have your triple negative. So that's now the divergence is kicking in. But you have that divergence when you're printing this distribution range. So right now we swept the lows. We swept the lows of the range. What would bulls need to see here going forward? They want to see a sustained move above this 9 and 21 day moving average. This is the 9 day. This is the 21 day. We're coming back up to retest the 50-day moving average, this purple line. Very important to watch how price reacts to this 50-day. Will it be a retrace before lower? Will the reversion back to the mean be sufficient? Or will we still need to come up to this 9 and 21 day and see how we react from here? Now, coming back to the point in which I was making about the comparison to that of total 3ES, take a look here. This is total 3ES, okay? It's the exact same thing. The only difference is that Russell never had the breakdown, you see? Boom, boom, boom. Now we're having a reversion back to the mean on the Russell, but it looks like total 3ES already had that reversion right here. So now you have this liquidity building up here on total 3ES. So we may have this breakout, but be mindful of the possibility of a fake out down below 485 billion. So we need to get above number 1 on total 3ES. 823 billion, 823.68 billion, and 905.24 billion in order for us to consider a bullish pathway, right? Because so far we can't continue to go up considering the 3 week looks like this, right? You don't have to do all of this divergences and indicators and Elliott wave, you know, you could just take a look simply at the candles. Take a look here at the 3 week. Right? Remember what I said. The 3 week will always give the signal first. And that could also be said with the MACD as well. So by the time the monthly MACD crosses, you'll be already too far into the bear market to make the decision of selling, right? So what do? You look for a faster signal. So you look at the 3 week right here. Do you guys see? We already crossed down. And then on the 3 week candle, you mark out the close and the open of the last 3 week. If we can't get back into this range, then we're going to have a further breakdown. And when you take a look at it like this, from a bullish perspective, right? Because high time frame, I'm super bullish in like of crypto. This would just be an inverted head and shoulders pattern, right? This is your A, this is your 3 wave move up in your B, and then we come down in a C wave like that. But it's likely we're going to bottom out with Bitcoin when that time comes, likely in 2026. So let's continue to watch here. You know, I was going to make this video only for my members. However, I wanted to show you where we are and show you what may happen next week, because we're at such a pivotal moment in the market. So what I want you guys to do on this Sunday, if you guys have time, take a look here at Bitcoin, okay? Open up your Bitcoin chart, and what I want you guys to do is, one sec, let me just fix this layout. So what I want you guys to do is go to the indicators, type in SMA, add 4 of those onto the chart, or 3 of those, okay? You're going to go into the SMA settings, you're going to press this hexagon. One's going to be 9, and the time frame is going to be daily. Time frame should always be daily. It's going to be 9, 21 day, 50 day, right? You're just going to change the values, and this should be 100. You can also add that. Okay? What we need to see, what bulls would need to see, is a sustained push, a sustained hold above the 21 day and the 50 day. If we can get these 2 things and hold above it, then it's likely we'll make a new all-time high. But I must remind you that if we do make a new all-time high, it won't change the fact that retail is still not interested in the market. There's no retail interest. And if Bitcoin, if Bitcoin is in a bear market, then it's unlikely that altcoins can be in a bull market, right? If Bitcoin is in a bull market, but Bitcoin dominance is rising, then altcoins are unlikely to have a sustained rally. So what would we need to see? What would altcoin holders need to see? They would need to see Bitcoin number 1 to be in a bull market, and for Bitcoin dominance to decline. Because so far, if you look at the 2-week time frame on Bitcoin dominance, we've been going up since September. So let's see. This is 1, 2, 3, 4, 5. Right? 5. So since the low is set, 10 weeks of green. So the 2-week candle just closed. We have this wick, right? And we also have this wick on the September 29th 2-week candle. But it's likely that in this 2-week time frame on Bitcoin dominance will, number 1, fill the wick, of the last 2 week. So at 60.74, and then fill this October 10th wick at 61.7. We came very close to it, but I think we go up for one more shot right at it. So take a look here at the daily time frame on Bitcoin dominance. Take a look here at my black chart that I made. Let's remove all these drawings so you guys can see. Take a look, and you can see how much support we have to break in order for us to consider a sustained alt season or sustained altcoin run, right? So originally we were thinking, okay, this is your A wave, this is your B wave, and then this is your C wave up, 1, 2, 3, 4, 5. And then this is your 1, 2, 3, 4, 5, something like that, right? But I would consider that less likely, considering the way we started to grind back up here, right? So we need to break below this support right here at 58.93, 59.54%, and then we need to break below this trendline support that we've been using since 2024. Do you guys see this? See, this is January 2024. And we're already above the 50-day. We're holding above the 50-day on the 2 week. So we have to be very careful here being in altcoins. As long as we're above this 50-day on the 2 week time frame, as long as we're above this support here, and as long as we have this hidden bullish divergence on the monthly RSI. So many people are quick to point out the bearish divergence on the small time frame, but let's not forget that high time frame always takes precedence over smaller time frame analysis or indicators. So you see this lower low but higher low here, and we're above the 50-day. So I want to see us break below the 50-day, break below this support at least, right? This short-term support right here. So just be very careful. Continue to monitor Bitcoin. Make sure to come to your charts today, mark them up, put on those moving averages. We need to get above the 50-day moving average, and for us to see sustained move above it. And more importantly, total 3 ES needs to get back in to the range that was set over here. Take a look here at the 3 week. This range right here. Here, that's the close of the last 3 week candle, and that's the open of the last 3 week candle. And do you guys see how we pushed off of it? We opened off of that close, right? And now we're reaching down here. So we need to get back into this range in order for us to consider a bullish pathway. Okay, I hope you guys enjoyed the video. If you guys have any questions, please feel free to let me know. Peace out. Take it easy. See you guys in the next one.